Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Thursday, January 29th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So copper explodes overnight. What's next for these markets? Gold possibly to 6,000. You got copper up about 6.2% overnight. Gold up 3.6. Platinum up 3.6. Silver up 3.5 and crude oil up 2%. So quite a bit of green on the screen here. And I want to thank you all for the emails and insights about offloading physical silver at these levels. It's interesting how different regions of the country have varying market dynamics. Yesterday, I received a message. Now, if you don't know me, I make phone calls all day long. That's what I do with clients, and I had called on Monday probably 50 different places out there, and a lot of places just got back to me finally yesterday, and one of them said that they were interested in purchasing 100-ounce bars, but they are right now almost 2 months booked out due to the amount of people calling per day, scheduling appointments to sell. Inventory is so high that they are a couple months booked out. They referred a few other places to me, but what they don't know is that I already contacted those people, and they were all about 85% below spot. They were spot minus $15, $20, and then some of them were just turning away any kind of inventories coming out here. So where's all this metal going? How are the refiners going to process a lot of it? Who knows here? So it's interesting to see how these dynamics play out, because all too many times I see people posting that physical metal holding that is better than paper, but I got to make the case for having a number of different things. Also, I work with many farming accounts where those farmers, they hold the grains in the bin, and what do they do after they offload some of it? Well, if it looks like it's a bull market, they want to re-own it on the board, and one way to do it here is to offload some of that physical silver and look at some of these futures contracts. Remember, they do have 1-ounce gold contracts. They got 10-ounce gold contracts. We will have a 100-ounce silver contract here in the next week or so, so it's a great way to establish a futures contract and re-own those futures. And the benefit of the futures, you do get the leverage, which you could take advantage of here, and you can also, based on how you're funding your account, you can have these things fully paid for, notionally valued, or you can implement some degree of leverage out there. Remember, leverage is a double-edged sword. The other thing is you get the flexibility of nearly 23-hour trading days, and much of this trading activity, like the $120 silver we saw, happened in the overnight session. Now futures about $3 off those highs, and you got gold futures about $100 off that previous high that we saw. So looking at these markets here, I will also be on the show, the Chicago's Future of Finance, covering the precious metals later on today. So April gold, 55.47, up $206. You got March silver at 117.52, up $4. You look at the average true range on gold, continuing to boost up, $123. The pivot point that I'm watching here on April is 50.69. Now looking at the March silver contract, average true range, $7.20. So quite a bit of volatility there. On a 1,000-ounce contract, that's going to be a $7,000 move is what you could expect to see in your account on a daily basis here, given this level of volatility. Now looking at the pivot points, right around 106.64. Now the precious metals, the ETF flows, and I get a lot of questions about this because the ETFs are increasing those gold holdings for a 6th straight day, and on the silver, they're continuing to sell. So the questions about it, hey, volume is rising, why are ETF flows going down? Well, volume is most likely a lot of algo traders, a lot of those cryptocurrencies traders, a lot of people that are just chasing momentum, the FOMO buyers, things like that, just having day trading affair within that market, while the ETF flows are outflows. And I believe that many of the fund managers and people like that want to beta adjust size their positions. So with a level of volatility going up, what do? We naturally trim our positions down just a bit here in order to smooth out some of the volatility within the accounts. Now looking at the ETF flows, gold tacking on about 0.1% here year to date. Total ETF flows up 1.7%. They added 127,000 troy ounces of gold to their holdings in the previous trading session, and gold up about 25% year to date. Now silver, year to date, those ETF flows declining 3.4%. They cut another 5 million ounces of silver yesterday, 5th straight day of declines here, while platinum has a 5th straight day of increases. So we see a lot of range, a lot of volatility in that platinum market. And the gold silver ratio, Interesting, not actionable, in a sense that on the futures contract, what you're using this here is more of a gauge here to get a sense of where the market dynamics are at. What I'm hearing is that people, because of their frustration on trying to unload some silver here or getting those haircuts on the physical side of things, what they're doing is they're negotiating with those different dealers with the ratio here, saying, hey, with the gold silver ratio at this, can I swap out my silver and get this much gold? And then what they're doing is they're taking the gold then across the street, which seems to be extremely liquid out there because of the fact that central banks hold gold, and gold has an easier time as far as storage and things like that. Those 100-ounce bars, the 1,000-ounce bars are quite cumbersome, 6 and 60 pounds each. Swapping those out for those gold coins here, those 1 ounce, makes a lot of sense from a storage and a logistical reasoning here. Now, something else that I read is, where is all this activity going on and where are some of the squeezes happening at? Because the US seems to be flush with silver at the moment. Well, Hong Kong residents, they're hoping to cash in on that precious metals rally, and they're buying up silver bars as an alternative to gold, saying that gold has just been too expensive here after reaching those record highs. So we're seeing that Hong Kong Central Bank District here announced that hundreds of silver bars had already sold out for Wednesday. That was on the previous trading session. Now, another story that I was reading overnight, again, a lot of these things, it's just to get really of a gauge of the market. They're not really actionable. Again, they're interesting. If you know me, I have my own process here. I use a lot of technical analysis indicators, things like that. I use volume, volatility, price action to determine where things are going here in these markets. But there was a Wall Street Journal article that people sent me that gold had jumped to 5,500, and they're asking, where's this going next? So they pulled some of the major banks out there and some of the recent forecasts. Well, Soc Gen and Deutsche Bank both up in their expectations to $6,000 an ounce. Morgan Stanley expects it to climb to 5,700. We'll see how Goldman Sachs plays out, because they were about 5,400 here, and they already revised it up from 4,900. So we'll see where this goes. They might be coming out with a call that prices have moved up too far, too fast, but we'll see how it plays out. Now, in other assets, and this is important to watch because energy is one of the leading indicators, as well as food, as well as shelter, as far as inflation expectations. And you got crude oil futures up about 2.5%. You've also got a breakout going on in a lot of different agricultural crops here, like the wheat market, like the soybean market, all taking off a bit to the upside. You got crude oil futures jumping up quite a bit here and hitting $70 for the Brent crude contract for the first time since September, after Trump said that Iran must make a nuclear deal or face military strikes. Now, some sectors here in focus here, well, those mining shares, they're going to be active here, especially after copper posted its biggest one-day gain in a year, with it rising to a record. This is over on the London exchange to 14,000 a ton, driven by that bout of speculative trading here by the bulls in China. You look at the broader markets, because mixed picture we saw after that Fed announcement. Equity futures were significantly higher after breaking back lower as that Fed announcement came out. Jerome Powell, he was a bit of a lame duck after the meeting here, and it's really all eyes on who that next Fed official is going to be. But stock futures, they are moving higher after earnings offered a broadly upbeat tone here. Investors are eyeing another heavy slate of results due out here today. The S&P 500 up about 0.2%, sitting at 70.18 here, up about 10 points. You got the NASDAQ up 27 points, the Dow up 224, and the Russell, that's the one that I've been watching, 26.72, because those small cap earnings, well, don't tell anybody, those growths are really accelerating here quite a bit. You got earnings out of the 119 S&P 500 companies that have reported so far. 77 have managed to beat the analyst forecast, 16% have missed. We're going to have Caterpillar, Dow, Honeywell, all among some of those companies expected to report before the bell opens. All eyes will be on Apple after the close. So you're seeing these equities in some of these markets, well, they are extending their gains overnight. We will have some economic data coming out here, but it seems to still be overshadowed, and there's a hangover effect still from the government shutdown that we saw and the possibility of another government shutdown coming ahead. So it's tough for guys like me that are macro focused and that look at economic data to get these trends in these markets here, to see what buckets of asset classes perform the best here in these different environments. But we will have weekly jobless claims, November trade balance, followed by November factory orders and durable goods all coming out. This is the last day of the Fed's external communications blackout day, so we expect to hear from more Fed officials as the time goes on in the days and the weeks coming ahead. Now the focus goes over to that March meeting where investors are anticipating, or markets are anticipating, a 13.5% likelihood that the Fed will cut rates by 25 basis points. I'm not sure if we'll get it there. Maybe it's going to be closer to April where it's a 26%, or June, which is really forecasted to be that first interest rate cut. Now the dollar index, there was a lot of discussion about it getting slammed, and the integrity of the dollar index, well, the dollar snapped back here yesterday, sitting at about 96.24, essentially unchanged on the day, and you got the euro currency backing off after hitting 120 yesterday, sitting at 119.71. WTI crude oil in focus at 64.80. 10-year treasury yields anchored at 4.25, the VIX at 1863. No alarms there whatsoever on the volatility index. You got Bitcoin futures, really every rally in there just getting beaten up here. And I think some of the rotation is taking place where traders are looking at that 90,000 plus on Bitcoin, taking some of that off and trying to get where the action's at. Remember, Bitcoin and the crypto markets are really fueled by those momentum traders. And frankly, there's just not been any momentum whatsoever when you look at the crypto markets. You get to the S&P Gamma exposure, that remains positive while European stocks gain. Asian equities edged higher with the MSCI Asia Pacific Index tacking on 0.2%. So you guys got any questions? It's one of those days where saw that close, and then I was eyeing those markets from like the 5 p.m. open, and then I was eyeing them again at 7, and then I was eyeing it again at 8:30. I've been up since 2:45 a.m., but that's just a normal day here. I got to volatility adjust my sleep schedule to these markets as well, so it's going to be a longer day here in the markets. But you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.